Peter Schiff. This is December 7th, 2009, a date that will live in infamy, if you recall. Fortunately, today was not nearly as eventful as it was in 1941, but I will comment on the day's events nonetheless. First of all, gold's correction continued. We were down, I think only down another $6 or $7 by the close today, although we were down another $20, $25 early on. The dollar continued to strengthen a bit in the morning. It was down again by the end of the day, although it closed off its lows, but it was a down day for the dollar. You know, I was reading an article in Bloomberg trying to discredit gold as a long-term investment, and it was pointing out how gold has been a terrible investment for people who bought it in 1980 and who still hold it today. And they went over how gold has done over the past 30 some odd years compared to stocks, bonds, a checking account. Of course, they conveniently happened to pick 1980 as the date of the comparison. And I see this happening all the time. That was the peak of the gold market's move during the 1970s. Why did they pick 1970 when gold was $35 an ounce? If they had done that, they would have very different results. Of course, they picked the absolute peak of gold. The inflation-adjusted high for the price of gold is still 1980. But it makes no sense to take a look at that comparison and say, therefore, gold is a lousy long-term investment. It just depends on the term with which you're defining it. Sometimes you can look at a long-term investment and stocks are a lousy investment. I mean, if they would have looked at just the last decade, for example, since 2000, it's 10 years. Most people would look at 10 years as a long time horizon. Gold is more than tripled. The stock market's down. Look at the NASDAQ. The NASDAQ was at 5,000 in 2000. It's less than half of that. Maybe 10 years from now, the NASDAQ still won't be at 5,000 again. Certainly in inflation-adjusted in terms, it won't. I mean, look at the Dow. The Dow since 2000 has gone from 43 ounces of gold to fewer than 9. So it's very subjective, the time frame they use to try to discredit gold. But the fact that there is so much out there in the mainstream media to discredit and discourage people from buying gold is another sign that gold prices are going to continue to rise. It's interesting, too, that whenever I talk about gold or gold standard, politically, people always try to accuse me of, oh, Peter Schiff, he wants to go back to the gold standard. As if, you're going backwards in time means you're going backwards in progress. Well, not everything that's old is bad. I mean, sometimes the old way is the best way. But if you really want to put it in perspective, we were on some form of the gold standard at least as late as 1971. So in a way, I want to go back to the 1970s. What people who are advocating fiat money want to do is they want to go back to the 1770s. They want to go back over 200 years earlier to the Continentals issued by the Continental Congress. Moving to the gold standard in the Constitution was progress as far as our founding fathers were concerned because they had a bad taste in their mouth from the massive inflation and depreciation of the Continental. And so they started us on a gold standard when they wrote the Constitution. So the people who want fiat money want to go back even further than I do. So that's something that we could bring up to discredit that point of view. Also, I wanted to talk today about the TARP. There's been much in the news regarding some of the banks, Citibank, J.P. Morgan, Bank of America, who have either moved to repay, have already repaid their TARP money. And the government is touting this as some evidence of success of the TARP program because these banks are able to pay it back. Well, number one, this assumes that the banks aren't going to need the money again. First of all, the reason that the banks can pay the money back is, number one, because the government changed the accounting rules so they can pretend a lot of their assets on their books are worth a lot more than they really are. And so that puts them in a position where they can afford to pay back the TARP money. But the earnings that have made a lot of these repayments possible have come from free money from the Federal Reserve. The Federal Reserve has loaded up all these banks with free money. They've taken it and made some very risky bets that have thus far paid off. And they took a lot of risk with taxpayer money, knowing that if the risks didn't pan out, they could always get more bailout money. The risk did pan out, so they're lavishing record bonuses. And I think Goldman Sachs, J.P. Morgan, and Morgan Stanley, all three companies, are going to be making record bonus payments this year, even bigger than at any point before the bubble burst. And all this is because of this cheap money. And so what is the consequence of these banks being able to pay back the TARP money? The consequence is the banks are even more leveraged now than ever before, so that the next time they fail, they're going to need even more money from the TARP. And of course, the Federal Reserve's balance sheet is loaded up with toxic assets that were purchased from these banks. So when the government is claiming that the losses aren't nearly as bad as we think, that's only because the Fed hasn't tried to unwind these trades. The minute the Fed tries to withdraw the stimulus and sell these toxic assets, then we'll see how much we lost. Who knows what, if anything, the Fed will be able to get if it tries to sell these assets. I mean, talk about counting your chickens before they're hatched. And one of the funniest things about this, the TARP money, is some of the Congress or senators are claiming that since the TARP is not going to cost as much as we thought, or since some of the banks are paying back the money, that we should use this windfall in jobs programs to create jobs. As if this is actually a windfall. We don't have this money. This is money that we were going to borrow, that we're now not theoretically going to borrow. It's not like the money is actually there. There's nothing to spend. This is no peace dividend like, like from the end of the Cold War. This is money we were going to borrow from the Chinese that now we might not have to borrow. So should we then say, well, since we're not going to borrow it for one reason, we should go and borrow it for another reason? This is insanity. And of course, government spending won't create jobs. It'll destroy jobs, or it will replace productive jobs with non-productive jobs. My potential opponent in the Senate race, Chris Dodd, is now out there counting. He's coming back to Connecticut. He wants to use some of this TARP money that we theoretically have to try to stimulate jobs in Connecticut. He wants to hire people to help weatherize people's homes so that they're more insulated, more energy efficient. And while maybe that would be a nice thing for some people to have, it's not going to net create jobs. It's going to destroy, some jobs to create jobs that the government thinks should exist. But this is the type of nonsense that we need to get out of Washington. When politicians promise you favors, you have to understand that their favors are very expensive. I was even listening today about a report. Apparently, our elected officials are very concerned about the fees being charged to use ATM machines. They think it's outrageous, and they want new legislation to rein in the excessive fees at ATMs. I mean, give me a break. I mean, how much does it cost to go to an ATM? $1? $2? I mean, how often does the average person use an ATM? Once a week, maybe twice a week. So you're talking about a monthly expense of $10, right? I mean, these guys have got to be kidding. What is the average American family paying income taxes every month, in Social Security taxes? You're talking about thousands of dollars a month. So these guys are taking away thousands of dollars a month, and then they're making a big deal because they want to help save us a couple of bucks at the ATM machine. Look, let the free market take care of ATM fees. Just get the government off our backs. Cut spending and cut taxes if you really want to help us out. Don't try to sidetrack us on these ATM fees. There's huge waste and expenditures and things that need to be done, real reform that can save us huge amounts of money. But no, they want to distract us and pretend that they're there to help us because they want to rein in these greedy bankers who are charging us a couple of bucks when we want to access the bank account to try to distract us from all the money that's not going into our bank accounts in the first place because the government is taking out of our paychecks before we even have a chance to put it in the bank. Also, I want to give everybody a quick update on my campaign. One of the other candidates, Tom Foley, made it official last week. He dropped out of the Senate race. He's now running for governor in the state of Connecticut. So that makes two people now that Sam Caligari has dropped out. So I now only have two challengers. So when I first announced that I was running for Senate, I was fifth. Now I'm third. All I need is Linda McMahon and Rob Simmons to drop out. I'll have the whole nomination sewn up. Seriously, though, I don't expect these other two contenders to drop out. I always thought that this would be a three-man race between McMahon, or two-man and one woman, McMahon, Simmons, and myself. And I think I'm very well positioned right now as the alternative to the two front-runners. If people don't like either McMahon or Simmons, I seem like the only choice right now. And I think once I get my message out there and once people hear what I have to say, people will vote for me, not simply because they don't like Simmons or McMahon, because they like me and they like what I stand for. Also, we just opened up our headquarters in Milford last week, so the campaign is really picking up speed. And make sure, if you haven't, visit our website at www.schiffforsenate.com. Take care, everybody.